this Stock Box interview.
Joining us today is Adam Wilson, the CEO of Ben's Creek. Thank you very much for your time today. Adam, how are you doing?
I'm doing very well. Nice to see you again, Mark. Welcome to Ben's Creek. We're actually at the site today.
Excellent. Well, it is the Shareholder Day, isn't it? And we've got a lot of questions that have been sent in from your shareholders that we're going to address in this interview. But perhaps just start us off by telling us a little bit about the Shareholder Day, why you're doing it, and what you're going to be doing to the shareholders that are visiting you.
Sure. I mean, we're in the middle of West Virginia, so we don't get a lot of shareholders. We've had 3 that have come over to visit. So it's nice to have somebody here. We're just going to show them around the site. There's a lot of progress, a lot of benching and shareholder value that we've added that doesn't always equate into financial return. There's a lot of coal here at the moment. There's a lot of benching for future coal, and there's a lot of raw coal. So I'm hoping, and we've made a lot of capital improvements. So it's nice to be able to show that off, and then hopefully they can post pictures and tell other shareholders, as well as the dreaded questions that you're going to be asking later. We're hoping that that'll give us able to catch things up. We haven't been doing as many podcasts as perhaps we had when we started, but that doesn't mean that we've not been very busy, and coal prices have been doing very well. And, some of our competitors are seeing all-time highs with their share price. So, very keen to try and get the message out now that we've got lots of positive things to talk about.
Well, definitely a theme I picked up from the questions that were sent to us were, yes, the shareholder comms have perhaps dried up. I know you engaged recently with us at Stockbox. You work with the Roast as well as perhaps some other providers there. So it's on us to push you to come on and do interviews to get the questions shareholders want answering. Never be afraid anyone to send them to me, and we'll make sure we do our best to get Adam on. I mean, to give you a sense, I think we had over 100 questions that were sent to us, which would have taken an awful long time to get through. There was a lot that were very similar, some were actually the same. So we've condensed that list down into around about 45 that we're going to go through now, with hopefully fairly short, snappy answers from you, Adam, so we can get through in good time. But what I would say to anyone watching is, if you feel your question has not been answered or you want a bit more detail, no problem, just let us know, and we can follow up with a shorter piece to make sure that the questions are answered, because I know you're very keen, Adam, to get
I am keen, Mark, and can you just confirm, right, because one of the questions I've had is, did I edit the question? These are come from you. I haven't picked out which question. So as you ask it, we're going to try and answer it. We haven't edited any questions out.
We haven't edited any questions out. All I've done is condense 100 down into 45 with the help of AI. ChatGPT is very good at kind of helping with those kind of automated tasks. But no, there's been no edits, from you or anyone like that. It's all the questions as they are. But yes, 1 or 2 may have been missed. But for the most part, they're all there pretty much in what they were asked. So let's get cracking, because I know there's quite a few to get through. So the first question, Adam, I've grouped them into different segments. So the first segment will be on current performance. So the first question is the company at full production with 2 shifts on each high wall miner as indicated in the RNS on September the 13th?
You just froze a bit there, Mark. Do you want to ask that again?
Sorry, yeah, sure. I don't know what's happened there. Okay, I'll go that again. So the first question I have, Adam, is it's on the high wall miners. So at the moment, is the company at full production with 2 shifts on each high wall miner as indicated on the September 13th RNS?
Okay, well, that's a great question to start. I'm going to answer this with a little bit of detail. So we'll be a bit repetitive, because I know some of the questions you're going to answer I'll probably cover in this thing. But we are not at double shift on 2 high wall miners. We're running 3 shifts on the high wall miner. And this is only because of logistical issues around the supply of trains. It's got nothing to do with Ben's Creek. We could move to a 4th shift. However, NS, which is our only rail producer, they had issues in September we are on a railway where the railway cars are rotary dumped. That means they're clamped on when they get to the port. The 2 rail cars at a time turned 180 degrees, and the coal is dumped on the ships. It never goes on the ground. That's a rotary dump, it's called, and that rotary dump was repaired in September, and that delayed for every coal producer on that railroad trains for about a month. So that's now been fixed. We've had 2 trains last week, 2 trains this week, so we're going very quickly to try and catch up. We need 6 or 7 trains a month to go to 60, 70,000 tons. But we've got limited storage here. We are full. We have 60 to 70,000 tons in stock as we speak. So we've been producing 50 to 55,000 tons over the last few months fairly regularly. And as the trains have come in now, we're able to go up to the 4th shift. But without the storage area, we've got nowhere to pull the train. So we are now and have committed to go to quarterly reporting. The next time we report will be in January. We did report, I think, August production because it was a record at 50,000. It has been going well since then. I can't give you the numbers because we're doing the quarterly update, but we had a very strong September. November had the month of Thanksgiving in it, so it won't be quite as good as September. We are now producing in line with the trains. So if we can get 55, 6, 7 trains, we will up the production, and we will also try and get the backlog of our trains. Just to give you a clue, we had 4 trains in August. When the problems came with NS, 2 came in September, 1 in October, and now it's picked back up. We did 3 trains in November. We've had 2 so far in December. It's only very early. It's only the 5th. We've got hope for another at least 3 more in December. So we're getting to the 5, 6 trains. We should be getting 6, 7 trains January onwards. And when those trains come in, we will move up to full production. And just the last thing on sort of cost, and I know that's asked and answered many times, at 50,000 tons of production where we currently are, our costs are about $116 a ton. As we go up to 70,000, the costs come to just under $110. So we drop another $6 a ton with economies of scale. We sell all our coal FOB rail. So as soon as it goes onto the rail, we lose it. And the sales of our coal are done pretty much 50% is done fixed, a fixed price, nettable cost. And the other way we sell it is linked to the index. When you get 100% or minus the broker discount of that index, as opposed to fixed. So we sort of do both. The fixed pricing that we've been selling at comes with a sort of $10 to $25 margin. So we're profitable. That's the margin on the fixed pricing. At today's price, the index, it's $245. That gives us about $30 of margin. Our break even, a lot of investors have asked that, is about $205. So there's currently $40 of margin. And that is why I think you're seeing all-time highs for Warrior Met Coal, and Arch and Alpha and Ramaco, is because there is a nice margin for the coal producers. So I hope we've never had an issue selling any of our coal. The market likes our met coal. We've had a few issues to deal with. All of my shareholders should be aware of that, but that's no real different to any startup. I won't take as much time on each other question, but I hope that gives a general update and answer to the first question.
Yeah, well, there's a fair few points there, because the expanding points from there was, if it's not at full production, can you elaborate on issues? But you've definitely done that. You've talked about the stockyard and the trains.
For shareholders that come in, we're built on the side of a mountain, and under the storage area is the flop gates which go onto the train. So there's just not room to put more than 100,000 tons. Yeah. That was not our issue. We didn't stop producing, though, during the period, and we're making money at 50,000 tons of production.
Okay. And of course, the follow-on was about trains, but you've talked there that you hope to get 6 to 7 trains from January onwards. So you've answered that.
And may even see that in December. I know that other people have asked about the railroads, just to very brief, there are two major rail networks on the east coast of America. We're on the NS, Norfolk Southern. It's a $1 billion plus company. The other railroad is the CSX. We're not on that road. We can't build another spur to get on that. The difference is the customers prefer the NS because of that rotary dump. The coal never hits the floor. CSX puts the coal one's at Norfolk, Virginia, the other one's at Newport News, Virginia. CSX puts it on the floor, but the coal can then get contaminated and damaged. So the customers, ArcelorMittal and the like, Algoma, prefer to load from the NS port. And there has been issues which we've elaborated on.
Okay. And with regards to the port then, is it an annual or a one-off occurrence of problems at the port? And how is the Panama drought crisis? Is that affecting Benz at all?
I've no idea on the Panama drought crisis. I don't know what that... No, that's probably ships more than rail. And it is a one-off. I mean, there's always issues at any port. But the issue here was the scheduled maintenance to the rotary dump. And the ships are still queued up. What that will probably do, though, as long as we can get our trains, it'll probably keep the coal price fairly robust, as there's not an oversupply of coal.
Sure. Okay. What's the full clean production volume? You said 50,000, didn't you?
We are producing at 50. I'm waiting to do more. As soon as I get more trains in, the miners will go into that fourth shift. But as I said, we're full of stock. It's a good place to be. Remember, as the coal price rises, and it has been rising, we don't have to do anything. The value of our clean inventory is going out. So that's an excellent place to be, but we're not there's nowhere to put it. So it's through no fault of any of the staff here. It is simply the trains. And as I said, we've had 2 in November, another 3 to 4 coming. At 11,000 tons a train, it really won't take long for us to clear this stockpile.
Okay. Details on profitability and production, you've covered that earlier in your answer there. So that question is covered. Next one, are Ben's transportation prices FOB? Are these prices reasonable for the industry?
Well, they are absolutely industry prices. The rail rate, it's a monopoly.
Adam?
We pay around $45. It is linked to the sale price, so that's a rough price, and it's an industry standard. Everybody gets the same rail rate depending on where they are on the railway line, because it's a monopoly effectively. So yes, it's absolutely standard, and all of our prices, it's either a net price including transport, or it's the index price where you have to convert from a metric ton to a short ton, take off any discount in price, and then take off about $45. So very, very roughly, it's about $100 off the quoted Platts price gives you what the actual price is on any given day.
Okay. And what price point does Ben get paid for a train of coal?
Right. So how that was, we would be, it would have been a huge problem for us if we don't get paid until we load the ship. So what actually happens is we get a prepayment at just under $100 a ton as we put 5,000 tons of clean coal in the storage area. So we get $100 as soon as every 5,000, and then the delta, the difference between the sale price and the $100 is paid when the weights are received at the port. But if we were selling at around 140, which is around our average price at the moment, you get just under $100 straight away, and then when the train leaves, you're getting your $40+ after it's weighed. The weights, the official weights, are taken at the port just as it's loaded onto the ship.
Okay. And what are Ben's options if there are constraints in the distribution network? Can coal be transported within the United States?
We do transport on the network takes you to all the major US steel producers. So it's easy to transport within the US on the rail network. We can also truck. We have trucked in the past. I don't want to truck. It's 40 tons versus 11,000. It's $17 to the nearest rail loadout a ton. So it's highly, not in the company's best interests. We're much better using the rail. And of course, we are stuck. I can't change that. into having used NS. But there are only 2 rail roads, so really everything can go out on the NS. As I say, you get 3 trains in a row, you're taking 35,000 tons out of here. So as long as they come, even if they're bunched up, and we've had, as I said, we've had 2 in December, we've got another one here today, another one coming tomorrow. Very quickly, it'll pick up the backlog.
Okay. Please, can you clarify how coal transport arrangements were from the mine work?
Well, again, we're slightly going over the same point, but these go NS, the Norfolk Southern. NS. So we have a 3.5 mile rail spur. Okay. As soon as you get down we've got 20,000 acres here. It's huge property. As soon as you get onto the NS, it's their responsibility. The coal is sold air freight on rail. So as soon as it's left my siding, it's the responsibility of the buyer. And they've got insurance in case the train derails.
Well, the last question I have on current performance, which has been covered, maybe you can just sum it up, is why has Ben not achieved the target of 70,000 tonnes of clean met coal per month, and when is this expected?
So again, we could mine more coal if we had more storage area. So we would expect, if I can get the trains in that are due, we would expect January, February to be at the 70,000. We've got the 2 highwall miners. We've now got a 4th crew ready to go. So we're all ready to go. As long as we can get the trains to clear out the back stockpile, we will be ready to go. So I would think, sometime in January, not January the 1st, but sometime mid-January, as we clear out, if we get the trains we're promised, we will be moving from 50 through to 70,000 tonnes. 60 and then 65, and then not all in one go.
Sure. Okay. Well, moving on to performance outlook then, how do costs change at full production? What is the net profit per tonne? We've covered that a little bit. You said just under $110 a tonne, didn't you?
Yeah. I mean, just to go through it again, roughly at 50,000 tonnes where we are now, it costs about $116 a tonne. The more you produce, the less per tonne. So at full production, it's just a smidgen under $110. In fact, it's hard to get the unit cost down in the coal price. But if we were at 70,000, it would be just under 110.
Okay. And are the broker fees charged by Integrity in line with industry standards?
Again, they're competing in a competitive industry. Yes, they are in line. So only broker fees are charged to us on index. So half our sales are at a fixed price. That's a net price to us. I've no idea what he's on selling the coal for. We take that price. So that has been around $140 recently. If you're going index, he charges, his fees are in a discount to the index. So the index could be 245, then there's a discount to that index. I'm not going to embarrass AANI and Integrity with what they are, but yes, and of course having having now Integrity and AANI, we have competition together. But yes, they're very much in line with industry standards.
Okay, and how does the offtake agreement with AANI differ from Integrity?
It doesn't really differ at all. I mean, AANI have got a slightly harder job in that they're a 29% shareholder, and so our directors, our NEDs, have to approve that any trade we do them is not advantageous to them because of their related. So it makes it slightly more difficult for AANI. Where we're trying to go with this, though, AANI have got a clear advantage in selling into India, which is their biggest market, and which India for us is the future. That's where we think there'll be like 100 million tons of steel going to 300 million tons of steel production. It should replace China. We're well set to export into India. Integrity, of course, deal with all the other domestic US and markets. And they are competition for one another. So it keeps us, Integrity and AANI, honest, if you like, by having 2 people. And we can trade with others. We don't have to trade with those 2. We're not exclusive, with those 2. We can, but obviously with the stockpiling of the coal and the prepay, it makes it difficult to have multiple customers because they're effectively providing our working capital.
Okay. Well, on India then, have AANI brokered an advance purchase of coal to supply India?
They have, and we announced that on Friday, 1st of December. First time we've gone to an order with them. So again, these things take time. I know Sometimes I get overexcited. I know that. Sometimes the shareholders say, it hasn't happening fast enough, Adam. But we put them on. They bought the stock from MBU. They lent the company the money. We built up ready to do the production. They've signed the order into India. We're now stockpiling the order. So all of this, I know it's a little bit tomorrow, but it is happening. We still only shipped our first train in June 2022. I know we've got a very loyal shareholder base, but if they just can hang on a little bit more, we are getting there, and we're getting there quickly.
Okay. And will Integrity continue to be an off-taker from January?
Of course,
and at what capacity?
They're a key customer to us. We don't want to go down to have one customer, especially a 29.9% shareholder. It would be bad for the company. We really want to get these guys competing so that it's all part of the shareholder value chain. One customer, two customers, get them to compete on price, increase the market. All part of a chain. I'll just apologize again that it hasn't happened as quickly as we wanted to. But in terms of a startup, we're now the 6th largest high vol B miner in the US. We're shipping 500,000 tons. It has actually been quite a quick progression, but it's just we have high standards. We got all enthusiastic, and we wanted it to happen even faster than it has.
Okay. And when do you expect the company to be in full production and for the issues mentioned to be resolved? It's January, you said, wasn't it?
The issues have been resolved, really, Mark. I mean, we've now had, as I said, we've got 2 trains already been and loaded in December. Got a train in today. We're expecting one. So now those issues have been resolved. As soon as we clear up the stockpile, I would say some point in January, we will be going to the 4 shifts.
Okay. And will more underground mining commence in the near future?
Yes. I mean, it's a key part of this, of the mine plan here. We're doing most, as I say, 70-80% of our production will be in the 2 high wall miners. That's the easiest coal, the cheapest coal, it's all pre-law, so it doesn't have to be reclaimed to the same level. But the underground mine is where the real quality is. And so we produce a branded Ben's Creek coal, which has been now taken by some of the largest, ArcelorMittal, Algoma. These are the largest steel companies in the world. It's a great product, as I'll be showing these guys, making them get their hands dirty later today. So yes, we do need to keep that underground on. It gives a consistent quality, better quality the deeper you go underground.
Okay. And in terms of the forecast for met coal prices over the next 6 to 12 months, what are you looking at?
Well, again, I'm always bullish. Now, we have had shareholders have been patient. We've seen the coal at the high of 450. We've seen it at a low at 190. At 190, it's bad news for us. I'm not hiding that. And we had a lot of 190 coal in the period in the summer. In June, July, we were at our lows. We're now at 245, where we've got a $40 margin. My own view is the logistical problems that we're seeing in the US, as well as around the world, means that I think that we will see that price continue to go well. Look at the quoted met coal producers, all-time highs. AANI, the biggest exporter of coal into India, bought 29% of the stock. We've just done an order with AANI. I mean, I'm not, if I could guarantee the price would be high, I'd be a very rich guy. But I do think that the outlook for you've got a lot of defense spending. There's a lot of conflict, Ukraine, and not only is steel used in the munitions, in those wars, unfortunately, but the main use of steel is obviously then when the rebuild. So when you're going to rebuild the Ukraine, when you're going to rebuild the Gaza Strip, that's all going to be done with steel. So I think, the demand is set fair. And we've talked about India. India's looking to treble the amount of steel from 100 million tons to 300 million tons over the next 5 years. We are positioned to sell in that market.
Okay. What is a contingency plan if prices drop below break even?
We will have to shut down. No company continue to produce at a loss. We are a relatively small producer. We would have to mothball at a point. Now, we did go through a period of loss, which I've, in the last set of financials, we've got the interims to come out to September. At that point, we were suffering $20 loss at 190. $205. Sorry, $15 a ton loss. Remember, 205 is the break even. But I think that is behind us now. As I said, we've got $40 margin, and to me, all of the curves look like the price is rising from here onwards.
Okay. Do Panamax collier ships have to reduce capacity due to drought?
I have no idea. I would think so, but that's way beyond my skill set. Just to show we are answering every question asked, I have absolutely no idea. If any shareholder would to write in the answer, they could educate me as well.
Right, fair enough. Well, moving on to the next section, it's investment and financials. Is the company expected to raise cash this financial year?
I'm hoping not. I mean, I can never say never, but we have, at the moment, with the price where it is, we are doing okay. We would only really have to raise cash if the coal price dropped below the 205 level and for any sustained period. But as you've just asked me, rather than prop up a loss-making coal business, I think we would go, just shut down production for such time as the coal price remain low. So we aren't expecting to raise cash anytime soon.
Okay. And is the company focusing on building its cash reserves or prioritizing loan repayments?
Well, again, we're trying to run responsibly as possible. We are fully aware of our debt commitments, which run out in about 12 months' time. We'd love to pay that back, retire that debt early. I can say that we're already in discussions with our debt provider, which is AANI, who've already placed the order with us. So we are looking to get rid of that as soon as we can. And we're working. It's in AANI's interest as well as it is our interest. They're a 29% shareholder. They're our second largest customer, and we're trying to ship into India. So it's not like we've got a Volta hedge fund circling around us. We've got about the best lender we could have.
Okay, so you want to get them? Yeah. So you're looking to sort that out in a swift order
as fast as it is reasonably possible. They want dividends, same as everybody else. They're a 29%. They're our largest shareholder. So if we can get those out the way, that would clear the path. It doesn't take much at these sort of prices, shipping 60, 70,000 tons a month. These are big numbers.
Sure.
And again, if shareholders want to have a look, if you look at more mature businesses like Ramaco, like Warrior, they're much more mature than us. If a shareholder wants to have a look at Ramaco Resources last quarter, they're throwing off EBITDAs of like $200 million. They're a $1 billion market cap.
On dividends, and can dividends be paid before the loans are paid off?
Not really, but again, we are accelerating. We're trying to get those loans. It is a term of the loan that the loan needs to be paid back. And it's financially responsible of us, the company, to get rid of the debt on the balance sheet. But if we can get rid of the debt on the balance sheet, reorganize the balance sheet, this was always set to be, for the next 10 years, a dividend-paying stock. I tried to get it as fast as I can, but again, we started from nothing. This company hadn't been mined in 2017. I've seen various chat rooms going, oh, it's a bankrupt company. Absolutely right. It was a bankrupt company. We took away 60 million of debt and turned it into a royalty, and we're ready to go to produce coal. Once we get into the production of coal, and we can clear the hurdles, this should be, but again, I think I've been over enthusiastic about how quickly we can get there. But again, our first train left here in June of 2022. We're still only November 2023.
Sure. Okay. Yeah. Okay. In terms of projected dividend yield over the next 3 years, what is the projected dividend yield and what are the top risks?
Well, again, all I can do is point you to other coal companies that are more mature than us. The best example is Ramaco Resources. They produce 30 miles from her. They listed in the stock market probably 7 or 8 years ago. And only now are they producing dividends. But they're paying, high single-digit dividends, right? They're paying a lot of money back to their shareholders, and they're 7 years from listing. We only listed in 21? It's 23 now. We want to reward all shareholders, have been like a spun army to us, really loyal, supported the company, and we want to pay them back as fast as we can. But we only listed in 21. We only sent our first train in 22. If shareholders cast their eye on the Warrior Met Coals and the Ramicos, they're hugely cash generative with very high single-digit, some double-digit dividends.
Okay. Final question in this section: is Ben a potential acquisition target?
Well, we just look at our valuation versus their valuations. Look at the amount of money that we've spent, and we've spent that money as our share price went from 10p to £1 and back down to 10p. It's a public record how much money we've raised. People know what we've done with it. We've remediated a railway line. We've put in a wash plant. We've got 2 high wall miners. We're producing 50 with the potential to go to $70 a ton. We're 30 million market cap. Ramaco, who's round the corner, or Warrior, or Arch, or Blackhawk, there's not that many of them, and they're all multi-billion-dollar concerns. Alpha, I think, 3.8. Arch, 4.8. Warrior, $3 billion. $3-4 billion. Even Ramaco, our neighbor, is a 900 million. So, we are very, very cheap at these prices.
Okay. Well, on to strategic expansion then. Can you provide details on the resource update by an independent company?
Well, the independent company is Marshall Miller. They're the industry leader.
Okay.
We provided a small CPR when we listed, only looking at underground mining. Immediately we listed, we raised capital and went and did the overground mining. My chief mining superintendent here tells me there's 17 miles of bench, most of which we're going to show our shareholders today. Marshall Miller produced a report which I put out on the market with 96 million tons in situ. You then go through reserve and resource. We have to get more drilling to qualify. That's an ongoing experience. When we put out our last set of results, our depletion of the small amount of reserves we listed was halved. We're adding reserves which can't go onto the balance sheet. We're adding reserves every time we get an update. We're getting updates every 6 months, spending money every week on building that up. The next thing is to get the CPR, get 20 million, I would think, in the reserve and the resource. But that's not a forecast. That's just what we hope. They've already written a report saying there's 96 million tons on the site. We just need to get that qualified in proper accounting terms, which are recognized by the AIM exchange.
Okay. Is Ben considering adding a third high wall miner?
No. We've looked at that extensively. The problem we've got now, the storage area, the internal logistics of moving the coal around, the problems we're getting. 7 trains is probably, reasonable. If you put a third high wall miner, you wouldn't be able to get the trains. The wash plant's rated at about 1.2 million tons a year. So again, we've got plenty of capacity, 70, 80,000 tons. If we went any higher, the plant couldn't cope. I couldn't move it around the site. I wouldn't get the trains. We'd run out of storage. So for those reasons, we're very happy. It's a 90% built jigsaw puzzle.
Okay. Are there pending permits with DEP? What areas do they cover?
There are always pending permits with DEP. It's an ongoing, as we finish one permit, we're applying for the second. So we got our first new permit on the 27th of September last year. We've now got approval from the DEP for our next permit. We're still, another year out on the current permit. That permit will come through probably 90 days. Our mining engineer, we have an in-house mining engineer. He'll be already working on the third permit. As you get a new permit, you have to put bonding up. As you close the previous permit, the bonding is returned to you. So it's an ongoing process, but we have at least 2 permits in various stages of application. One approved, subject only to public review.
Okay. And when will mining commence on additional leased sites?
Well, again, there's a life of mine plan. I think that question is probably directed about the integrity tract. I think that's our mine area number 4. So we're on number 2 at the moment. So if we can go through the permit, I would I mean, a guess would be 24.5, end of 24, beginning of 25. But, that's just an area we acquired. There were 2 acquisitions. We've got 20,000 acres here. There's probably 20 areas that we've got to mine. And then the mine plan will be extended. It will be mined here long after I'm gone. Hopefully, the shareholders won't want me to go too quickly.
Yeah, hopefully not. The final question on this section before we get into management: does Starridge require additional finance to commence production?
Well, all mines require additional finance. As I said, it's a bonding process. But as you move to bond that permit, the permit that we were on previously gives back cash as you close off. So it's an ongoing requirement. We've already got the equipment. We've got the staff. We've got most of the jigsaw puzzles here. We've got the infrastructure, the railway line, the wash plant. We've got that yellow iron. We've got the people. So most of the expenses already been paid for.
Okay. So on to the final section on management. There's just maybe 3 or 4 questions here. Has a new CFO been appointed? What is the role of AANI?
Right. So there's 2 questions there, I think.
There is questions
right.
there.
So the CFO hasn't been appointed. We would announce that we really are taking our time to get the right CFO. It's not the most popular job in the world in the middle of West Virginia, CFO, but we have had, I would think, I did an interview today, one yesterday, my non-execs are helping. We've probably had 10 good candidates. We want to get the right candidate rather than just the first candidate. So I would think we'd be ready to announce an appointment. The financial year end is March, so really not going to make much of a difference in the financials to March. We would need him in place to do the next financial year starting April. So my guess is, we'll finish the process and he would probably be announced February, March to start working on 2024, March through to March 2025. Right, what was the other question?
And it was what was the role of AANI?
AANI are our largest shareholder. They are our lender. They are a client customer. So, the beauty of that is you might have a separate lender, you might have a separate shareholder, you might have by tying the 3 of them up, we really have got quite a bit of pressure we can apply on AANI, and they're happy to do that. They want the coal. They see the growth in the India market. So their role is threefold: shareholder, lender, and customer.
Okay. Will bonuses be performance related and paid as deferred options?
The bonus question, I would think that's one of our more asked questions, right? Bonuses here are, to be clear, bonuses here are not set by me. I do not set my own bonus, right? They are done against KPIs, key performance indicators, and they're not all the share price. It's safety record. How much have you produced? Did you get the railway remediated on time? How many days sick? How much shareholder value have you had? How many reserves have you had? There's a whole list that the remuneration committee put together, and then we are judged against it. They're paid for the prior financial year. So unfortunately, by the time they get announced, which is 6 months after March, sometimes shareholders don't put the disconnect there. 2022, we hit a high share price. We put the mine back into production, huge amount of shareholder value. But if I can ease some of the shareholders' worries, profitability is a key driver from here. So obviously when you start a business, you're trying to remediate it, shareholder value, put the railway. So that was one of the key factors behind historic bonuses. Going forward, bonuses are going to be driven much more on profitability. And no, I don't set my own bonus. Much as I'd like to, I don't. So that is a committee, and it's done against KPIs in the future. And historically, they were on building shareholder value, putting the project together. Going forward, they're on profitability.
Okay. Are there plans to review the company communication PR arrangements? We did touch on that at the start. I believe you want to do a bit more of these kind of things with us or potentially other people, making sure that you're engaging with shareholders.
I think really, I was very quick out the box and did a lot of PR about building the company. Then we actually got it built. It is now 90% built. All of the heavy equipment's on site. All we need now is to execute. So We are now moving to quarterly production figures. We've hired your good self. We've hired the roast. We've hired Proactive. Do you want to just, I'll put you on the spot, shut me up for a bit, give a little bit of history, how many followers have Proactive got, and what are you helping us with the Twitter feed? Perhaps you could do a minute on what Proactive is going to do for us so that we can tell our shareholders we take it seriously.
Or Stockbox, indeed. So from Stockbox's point of view, we have, I think, over 10,000 subscribers on Twitter. I think 2,500 on the YouTube. News-based journalistic platform, really transparency, honesty. As we say, no questions edited here. And our MO really is to get, give investors the information they need to make an informed decision on their investment. And we are quite proactive. We're not proactive, but we are proactive in getting companies to come on to answer those shareholder questions, or to come on after news releases or significant developments. So rest assured, we will definitely be pushing you to, or other people in the company to come onto Stockbox to communicate with shareholders. And like I say, I'm very open for shareholders, investors to contact me directly. I'm there on Twitter. My DMs are open, or reach out to Stockbox. We'll pick them up and we will make sure that your concerns are answered. We're very keen on that. That's a very important thing for me, to make sure that we're delivering what our audience, your shareholders, want to know. So yes, we will be quite active, hopefully, going forward with Ben. A final question. Given the positive news about Met Coal, why is there limited interest in buying into the company, do you think, and what actions are planned?
Wow. That's a good question to end on. Well, I mean, let me start. We listed 2 years ago at 10p. The share price has been from 10p up to 110p and back down again. So we've been through numerous cycles of buying and selling. So I don't think it's fair to say there's no interest in the company. We had a 500 million market cap at one stage. Given where the Met Coal price is now, and given the money that we put into this project, and given the state the business is in as a completed puzzle, it really is the best value that it's been through its cycle. It is much better value today than when we listed. That's just a fact. That's not my opinion. We believe in the future of Met Coal. Every dollar from here that Met Coal puts on, we make a profit. The same is true if Met Coal collapses. If as an investor you don't fancy the future for Met Coal, you should not be buying Ben's Creek's shares. We are a geared play, because we're a miner, we're a geared play on Met Coal, which is in itself a geared play on steel. And if you look at our competitors, Warrior Met Coal, Ramaco Resources, Arch, Alpha, Blackhawk, they're all quoted in the US. They're all at all-time highs. So really, if you're buying or want to consider Ben's Creek, it is, what is your view on the steel sector going forward? Is it going to be hugely spent on defense, on rebuilding? Are we going to see infrastructure projects, et cetera, et cetera, et cetera?
Okay. Well, thank you very much, Adam Wilson, the CEO of Ben's Creek. That's just about 40 minutes there. A lot of questions to get through. Thank you very much. As I say, if anyone feels there's a few they still want to put across, do let us know, and we can do another one, hopefully a bit shorter. Good luck with the shareholder day today, and I know you've got a couple of shareholders there. It's always nice to get their independent views as well. Whether they want to be public or not, it's entirely up to them, but I would encourage them, if possible, to if they have a Twitter following, to say what they see, because they're on the ground right now.
Mark, thank you for putting all those questions together. I know it was a bit of a thankless task, and I'm sure we're going to have people say, "Oh, you didn't ask my question," but we really did try to get as many questions. A lot of them were exactly the same question, just asked in a different way. So sure. I hope we've covered everything. And thanks again, Mark. Great job.
I hope so. Well, thank you very much, Adam. Until next time.
Cheers. Bye-bye.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.